It's a pretty well-known fact at this point that starting to invest as early as possible in your life is one of the most important and powerful factors impacting the long-term growth of your investment portfolio's value over the years that you're investing, right? So despite trying to maybe pick and choose some individual investments to outpace the market, well, even just passively investing a couple $100s a week into low-cost, passively managed exchange trade funds for 30, 40, 50 years to really allow compound interest to work its magic, this has proven to be an extremely powerful way for basically anyone to become wealthy over time. It just takes, well, a lot of time. Fast forward to 2022 though, and we're in a completely different era than even 10, 15 years back, where now teenagers have a lot more opportunities to create substantial amounts of money as a result mainly of the internet. Whereas before, maybe teenagers had a paper route or worked at a golf course like I did when I was 14, 15 years old to make some money. Well, now we're seeing a lot more younger individuals starting side hustles, let's say a YouTube channel that can really generate a lot more income at a younger age. And I think this is absolutely fantastic, and I love seeing more individuals going towards entrepreneurship. But of course, with more money in the bank, well, this is now an opportunity for younger individuals to start thinking also about their future instead of just spending all that money out at a restaurant. So starting to think about investing early is going to be one of the most important factors in that long-term growth of this individual's wealth. And even if, say, you're not a teenager watching this right now, rather you're a parent who does have a child though, well, starting to think about investing for them on their behalf is one of the best things you can do for them. Even just a quick example here, who doesn't like taking a look at compound interest calculators? So someone who starts investing $500 a month, let's say, at a 7% annual interest rate when they're 25, which is usually even quite early compared to the norm, well, by the time that individual is 60, that amount would have grown to around $855,000, which is not bad. But get that same individual to have started investing at 15 instead, and now we're looking at more than double the amount with 1.77 million. Of course, this is a very black and white example and assumes multiple things like constant interest rate at around 7% and also continuing to invest consistently $500 a month for 45 years. But the fact of the matter is, starting to invest early, even by 5 to 10 years, has a monumental impact on the long-term growth of wealth as a result of compound interest. Hey everyone, my name's Griffin, and this channel is all about helping you achieve your financial goals. So after so many requests from people under the age of majority, typically 18 or 19 years old, depending on where you live, well, I wanted to make a video going over some different ways that you can start thinking and looking at investing early. So we're going to be talking about stock market investing, crypto, and then also a couple other ways that you can start investing in assets that aren't regulated in a market, so anyone can start doing this. All right, so when most people think about investing, usually stock market investing is one of the first things that comes to mind. And if you're a teenager with some extra coin on hand looking to start investing, chances are you're a go-getter and you're well aware of the stock market. Now, before we get into what can be done in regards to stock market investing, I just want to quickly mention that if you are under the age of majority in your area, you can still have a bank account if your parents do end up signing off on that account. And pretty much everything we're going to be speaking about in today's video will require a bank account. So I just wanted to put that out there, even though it's probably common knowledge. But of course, that's not why we're here today. So if you are under the age of majority or you have a child that wants to start investing, there are a couple available options to you. And we'll start with one of the simplest and most straightforward options, being the informal trust. That's also known as the ITF account, which is short for In Trust For. Most banks do offer ITF accounts like TD, BMO, RBC, and they're a lot easier to set up than formal trust because they don't require that a lawyer draft up a deed outlining the terms of the trust. So with an ITF though, the account holder is the trustee and then the minor is an irrevocable beneficiary, meaning that once their name is on that account, it cannot be changed afterwards. And with the ITF account, the minor is the sole beneficiary of the entirety of the assets within that account. However, the adult, that is the trustee, does have control over that account over the course of time that the minor is still under the age of majority. And once the beneficiary does come of age, well, they can request a non-taxable transfer to another account solely in their name. So this is a great way for minors who might have some extra cash laying around to start investing in their future. And that being said, if you are a younger individual looking to start investing for the long term, I would highly encourage that you maybe only hand select 1 to 3 individual companies that you're really interested in, and then the rest of your funds ready to invest with be allocated towards low cost, broad market exchange trade funds as you're really building out the foundation of your long-term portfolio. This is really going to allow for the most hands-off and passive approach approach to your investing while you're learning and getting a feel for how the world of investing works. So I have a bunch of different videos covering core low-cost exchange rate funds that I highly recommend you check out after this video. Now, if you're in the United States, you're probably familiar with the Roth IRA account, which allows you to grow your contributions as well as your investments on a tax-free basis over the long term. But you may not be aware of the fact that you can also open a Roth IRA account for a minor. Basically, sort of the same concept as the in-trust account that we just looked at earlier. You can open up one of these Roth IRA accounts for a minor, and you're going to be the trustee essentially, or in this case, they call it the custodian of the account, and then the minor is going to be the beneficiary owner of the assets held within that account. Currently, the maximum contribution towards a Roth IRA account is $6,000 per year, or the total of the earned income in the past year, whichever is less. So again, this is a fantastic way that you can start growing your funds over the long term on a tax-free basis, and $500 per month is that $6,000. So as we saw earlier on in the video, this can have a huge impact over the long-term growth on a tax-free basis of your investment account starting below the age of majority. Now, if you're a minor in the United States between the ages of 13 to 17 and you do want to have a bit more control though maybe over your investments, there are a couple of new options available in the market. For example, Fidelity Investments, they've launched an account specifically for teenagers where you can control your account and your investments, but your parents are also able to monitor its activities, the trade, as well as transactions. This can be a great option though if you do want to have a more hands-on approach to your investing. But again, as I mentioned earlier, I would highly recommend if you're a younger individual to really focus on building out a strong portfolio of low-cost exchange rate funds for that long-term growth of your portfolio over time, instead of putting all the hard-earned money that you worked for at your summer job or any other business that you may have started into one or two individual stocks. But that's just the way I see it, and I would highly recommend that you consult with someone in your circle who does maybe have a bit more experience with investing, who can guide you further. All right, let's talk about another option that you could opt for if you're Canadian and you're looking to start investing under the age of majority. So earlier we talked about the in-trust accounts, where essentially this is a non-registered cash account where you can invest, but you're going to have a parent or a guardian be a trustee for the account. Now, rule of thumb, if you are underage, you pretty much can't have access to any registered investment accounts like the TFSA or the Rrsp. Technically speaking, the Rrsp, you're able to start accumulating contribution room as soon as you start filing tax returns, but due to the lack of flexibility for taking funds out, especially if you're at a young age, this is not really something I would recommend. And anyways, you'd be better off just keeping that contribution room towards an Rrsp for later on in life when your income is significantly higher, so that you can reduce your taxable income when it's in a higher tax bracket. But one option for a registered investment account that you could contribute to as a minor is your Resp, which is the Registered Education Savings Program. Essentially, this is an account that you can put funds to in order to grow towards your education. Now, what's great about this is that when you contribute up to $2,500 or more in a year, the government is going to match 20% of that amount. So that's basically free money that you're getting for contributing to this account. And then anyways, I always recommend that investment into yourself, into your education, is going to have the highest return on investment anyway. So in regards to the Rrsp specifically, this is for higher education, but if that's something that works for you based on your goals in life, this is guaranteed going to have such a higher return on investment over the long term in your career than any other investment that you can make in the stock market or anything of that nature. All right, so we've determined that investing in the stock market is truly one of the best ways that you can start growing your wealth over the long term, and the sooner you start, the better. So if you are 18 years or older though, this can be made really simple with today's video partner, Moomoo. Moomoo is a trading app that offers honestly an unparalleled amount of features built right into their trading app, like free level 2 US market data and commission-free trading for all US residents. They also offer real-time market quotes for all of your favorite stocks and cryptos, in-depth company financial data that's displayed in easy to consume visual graphs, as we're seeing right here, as well as other things such as short selling data that's updated on a daily basis, and even access to IPOs and extended trading hours, which is truly an unreal amount of features built right into this trading application at no extra cost to you. And for a limited time, if you're a new user to Moomoo, you'll get the chance to receive 2 free stocks valued up to $3,500 a piece when you simply open an account and deposit as little as $1 using my link down in the description. Pretty much meaning that in total you can get up to $7,000 worth of free stocks when depositing only $1 into your account. What's more is that if you make a minimum deposit of $2,000 or more into your account, you'll get an additional 3 free stocks, also valued each up to $3,500 each, for a total of up to $17,500 in free stocks. So make sure to use my referral link down below in the description to claim your free stocks if you're an American resident. And if you're Canadian, well, Moomo's also told me that they're looking to expand into Canada over the coming months, so stay tuned. All right, so now that we've spoken about some options for stock market investing under the age of majority, let's now speak about investing or trading cryptocurrencies, which a lot of younger individuals are now a lot more interested in as it's risen in popularity over the past couple of years. Now, back when I was 18 years old, I used to be trading Bitcoin during breaks at work on my phone, but this is obviously a completely different time now where there are a lot more restrictions in place for brokerages. So if you're under 18 years old, you cannot really open up a brokerage account, at least in Canada, and it's very limited as well in the United States. You're going to have to be 18 years or older. There are a couple of options though that we're going to be speaking about right now. First off, it's important to differentiate a cryptocurrency exchange versus a cryptocurrency wallet. So on an exchange, this is where you're going to be able to buy and sell different cryptocurrencies. It's basically a marketplace like a stock exchange. Now, this is usually going to now require that you upload identification, and in most instances, you have to be of legal age where you're conducting your trading activity. So that pretty much rules out that option if you're someone who's under the age of majority. Now, on the flip side though, a cryptocurrency wallet, anyone can have a wallet. This is basically the same thing as sort of like a bank account where you're storing your coins, and this is pretty much anonymous depending on the wallet that you choose to go with. Now, seriously, the easiest way that you could buy cryptocurrencies with the intention of sending them over to your wallet would be to just have someone who is of age and who does have an account on an exchange to purchase them on your behalf to then send them your way. That is really the easiest way that you can do this, and typically a parent is going to be in a position to be able to do this on your behalf. Now, that being said, I do not necessarily recommend going into cryptocurrency if you don't already have a plan in place with other investments, as cryptocurrency is significantly more volatile, and if you're looking for the long-term growth of your investments, this is probably not one of the best options. But I knew for a fact that I would have people comment down below some different options for this, so that is why I'm mentioning it in today's video. But just make sure to fully understand the scope of what you're getting yourself into when it comes to cryptocurrencies and the volatilities that come with it. All right, let's now speak about some alternative investments that basically anyone can do, especially also if you're under the age of majority. So if you didn't catch this from the rest of the video, basically if you're a teenager, trading anything that trades on exchanges is going to be extremely difficult to do. But what you can invest in, and arguably would have the highest amount of return on investment anyways, this is exactly what I did, by the way, are two things. Number one, investments into yourself through further education and really just developing a certain skill sets that are going to be able to produce more income for you. And then number two, investing in a small side hustle. These are hands down the two best things that you can invest in to increase your income dramatically, which by the way would significantly outpace any type of further or other investment that we were speaking about earlier over the long term while you're developing your skills and utilizing and applying those to the market. This is going to have a much larger impact on the long-term growth of your wealth than any other type of investment that you could do with a couple $100s when you're a teenager. Right, so let's start with an investment into a side hustle. If you're looking to start a side hustle, you can easily start, say, a YouTube channel with a couple $100s. Chances are you're already watching this on an iPhone. That's your camera right there. A couple other $100 for maybe a better microphone. You already have a Mac because you're at school and your parents buy you one anyways, or maybe not, but regardless, starting something like this is going to have a huge impact on your capacity to generate income. And then once you are 18, you'll probably have a much larger nest egg of capital to start investing with in the first place. Other types of small little side hustles you could start. I personally was into flipping shoes back in the day. I would go line up at a store, get Air Jordans, for example, buy them for $200, and a couple months later, I would resell them for $300, $400, $500 even. Did this a couple of times, but that's a little way that you can invest into a alternative asset class like shoes. But if you're into basically any other hobby, this probably applies to that hobby as well. And then of course, when it comes to investing into yourself, again, I've said this multiple times in the video and in multiple other videos, investments into yourself will always have the highest return on investment, whether or not that is reading more books on certain topics of interest to you, whether or not that's taking more courses, different classes, mentorships, masterminds, anything like that is going to have a profound impact on basically just growing your knowledge and being able to generate more income over the long term. Always remember that more income through the door is the #1 key to success to growing more wealth, because then you have more money to start investing with, and that's going to compound at a much quicker pace. So if you are a teenager, it turns out there are actually a lot of different options to start investing. And if you are watching this looking to start investing early, I absolutely applaud you, because this is one of the best decisions that you can make for that long-term growth of your wealth over time. That being said, make sure that you fully understand the consequences of your actions within your investment decisions, and I would highly recommend consulting with a parent or someone else who's of age and that has maybe a bit more experience in the space before pouring all of your savings into certain types of investments. I really hope you enjoyed today's video though. If you did, make sure to smash the like button. It absolutely helps the channel grow, and also subscribe and hit the bell button to be notified of new and upcoming investment content. So on that note, thanks a lot for watching today's video, and I will see you in the next one.